Hi there, Serial Trader here. Let's have a check-in with the major US indices. Alright, so this wave chart here with SPX, it's gotten to a point where there will have to be some adjustments made to the wave count currently. Now, I was discussing the possibility of wave 4-1 overlap here on these, what I'm calling minute degree wave labels. Alright, so today we did overlap with this proposed minute wave 1. And that level is at 25.83.23. We went as high as 25.95.32. So that overlapped. So that is no longer a valid way to count the subdivisions here on what we're trying to work here as an impulse wave down for wave 3. So I'm going to delete these minute wave labels. And I'm going to focus back on the minor wave labels. So this is actually, we had 4-1 overlap, or did we? And I'm going to present the case that maybe we didn't. So what I'm going to do is call this wave 1, and then we actually have an A, B, C running flat wave 2, and that's where wave B makes a new price extreme, and then wave C fails to make a new price extreme beyond the origin of wave A. That's called a running flat. An expanded flat would be where you came up above the origin of wave A. In this case, running flat. So this still works. So 1 down, running flat 2. This was our third wave down, our minor wave 3 wave down, right? And it's just basically changing the degree of labeling, but the overall message is the same. So minor wave 3 down was in fact complete there at 23.46.58, and now this more sizable corrective rally has been minor wave 4. And again, this will hold as a valid count as long as we don't overlap with this level, which is 26.21.53. So from today's high, roughly 25 points away. So that will be, the real level where you'd get 4-1 overlap, and then we'd have to reconsider this wave count a little more in depth. This was really just a minor adjustment, but. So that being said, as long as we don't overlap that level, this count will hold, and we should be coming down, just a moment here, should be coming down soon, starting to come down soon in minor wave 5 to complete intermediate degree wave 3. So that's the current expectation as it stands right now. And of course, I'll get more in depth into this. Fix the scale there. So now we have a key level to define the wave count against. The bottom line, though, is whether the wave count has to change from this point or not, we still currently just have a clear 3-wave rally off the bottom, okay? And a few things to point out. So our RSI on the daily chart here, right now we're sitting at 52 on RSI. So still well within the range of the bear market resistance zone on RSI, which is the range between 50 and 60. So still very much indicative of a bear market rally according to that tool. Our obviously MACD, this is a counter trend rally within a larger downtrend because we're still well below the 0 line of MACD on the daily chart. So we're still absolutely nowhere near changing the daily trend or just the overall market trend. This is still very indicative of a counter trend bear market rally. Also, a few things I want to point out. So we had this initial wave 1 down, and we made our low around 2600. The exact level is 26.03.54. Okay, and that served as pretty good support for a while there, right? We came down into the low 26s here, didn't even test that level. Came up again, came down again, little false break, came up one more time again, and then finally we had our minor wave 3 down as it's currently labeled. So that 2600 area, like support and resistance, it's not a precise level. It's more of a range or a zone of support or a zone of resistance. So this zone of support around that 2600 area looks as though it's now going to become a zone or a area of resistance. So that's actually quite bearish. Putting all Elliott aside and everything else, not that I'm ever going to put Elliott aside or anything else I do, but just putting all that aside for a moment and focusing on just the absolute most basic of charting principles, former support which was, strong support for a period of time, now looking to become resistance. That is not bullish, okay? That is, textbook bearish, really. Just like in a uptrend, having former resistance, then breaking through it, coming down, and then having active support, that's, bullish in an uptrend. Well, just flip that upside down, and here we are in a downtrend. So currently still working this impulsive wave down. Had to make a minor adjustment to the wave degree labels here. And I want to get a little more into the subdivisions just to clear this up, as this is the daily chart, so you can't see enough detail there. So I think we're done here on the daily chart for the wave labels. I want to get into this chart. And this is the hourly chart for some more detail. So I'll go ahead and delete these minor wave labels, or minute. Yeah, minute. Make some adjustments. So we actually had minute wave 1 here, and then minute wave 2. And let me just, I'll show you what I mean here. So we had our 1 down, and you can see within the 1 down, we had a nice little 1, 2, 3, 4, 5 down, okay? The subdivisions are there, so if you go to the 15-minute chart, you can get a nice 5 down here for minor 1. Then you had a move up, A up, B down, C up. So running flat, minor wave 2. And let me just adjust the degree here on this little ABC just for illustrative purposes. So you see what I'm getting at. We'll make that the minute degree. Right? So 1, ABC for 2. Okay? And then we had, you can get a 5 out of this. Depending where you want to put your 1, 2, 3, 4, 5, it's there. Whether you want to have wave 3 as the extended wave or wave 5 as the extended wave, you can certainly do that. But this very much has the personality. And let me grab that wave 3, minor wave 3 label. The personality of a wave 3. And, wave 3 typically is the strongest and, the longest. Usually stands out quite obviously in a price chart, and this certainly does that. So you had your 1 down, ABC up for 2, and then a strong wave 3 down. Now we've been working this wave 4, minor wave 4. Okay, so let me just make some adjustments to the degree here. This should just be minute. These should be minuet. Minor details here, but just trying to keep it clean. All right, so that being said, 1 down, 2 up, 3 down. Working our 4 as long as we don't overlap with this level right here, so 26, 21, 53, which we have not done. That would invalidate this particular wave count. So ideally we hold this and roll over basically right away. There's some early signs that's starting to happen, but we'll get to that. So the equality relationship, should we go up to there, that's 26.18. So that's just below overlap level, so that would still be acceptable. That's also the 786 retracement of this minor wave 3, right around 26.12. So that's also a nice area to get a reaction from. And right now we're basically between the 618 and the 786 retracement. So it could easily, have put in the top already, and we're already starting to roll over. So that being said, we have our ABC up for W, ABC down for X, ABC up for wave Y, which is a double zigzag pattern for minor wave 4. Looks good, feels good. Now we just need the thing to cooperate and start rolling over, and without overlap. Otherwise, there are other counts I can make. You could work this as a 1, 2, and then another 1, 2, although I won't really go there unless I have to. As far as trying to get a bullish count out of this, I tried to do it, but you know what? This is a 3-wave rally. And also importantly, it's a corrective looking 3-wave rally. And, do a little slope analysis here. So if we take the slope here of the first move up, go from the first correction, and then look at the slope of the, next move up, you can see that we're much shallower in slope than the initial move up. So say you somehow want to turn this into a 1, 2, and then we're at a wave 3 in progress. It doesn't work. It doesn't fit the personality of wave 3 because wave 3 should be sharper than wave 1. So in this case, we have a shallower third leg up. That's very indicative of a corrective move up, not an impulsive wave up. So slope analysis suggesting yes, this is a corrective 3-wave rally. Obviously, all the substructure is there for the double zigzag, and you can see that. Okay, so with this parallel trend channel, we got to the top of the channel here, had our 3-wave move down for X, and now this, subsequent move up, we've basically just been hugging the median line, the middle line of this channel, not even able to get to the top line. So that's showing some weakness just with the channel there. Yeah, we're just in basically Fibonacci zone where we'll be looking for a pivot. We haven't overlapped with this labeling of wave 1 and 4. We're just in that conventional resistance area near 2600, which was former support. So all those things are adding up to roll over right away. Also, just here on the hourly RSI, you see we got slightly overbought and now starting coming off that overbought condition. So that could be also a nice indication that the move is done. We got overbought and now finally coming down on the hourly. So everything's looking right for more downside. Now we just need it to actually happen. Could go a little higher still. I can't see it going a whole lot higher before we get at least some sort of reaction downwards. Now, that's probably good for explaining things here on the shorter time frame. So what we'll do now is go to the Thinkorswim candlestick chart. And on the candlesticks, okay, so today, definitely a doji day. So you're seeing that battle, that indecision, that upper wick and that lower wick. So you're seeing a weakening of this uptrend, up move. So typically, I mean, we've seen dojis before at big reversals. This was a doji up here that led to, significant decline. This was a doji up here that led to a significant decline. This was a doji right here that led to a significant decline. Dojis in this area before we really kicked off the bear market. Actually, quite a few of them. You can see a lot of indecision, a lot of inability to really have follow through. So dojis, definitely a helpful candlestick signal when put in the context of where we are in the trend and everything else. So possible reversal day today. Obviously, we need to start seeing some down days, some downward moves. Stop this, higher high, higher low pattern. You can see on these daily candles ever since this one here, we've had a high and then a higher low, higher high, higher low, higher high, higher low, higher high. So the first sign will be breaking that very, very short-term pattern of taking out the low of this doji. So today's low at 2568.89. That'd be the very early sign that, okay, we've at least broken this higher low pattern, and then we'd be looking for more significant continuation down. Also, daily oscillator now in the overbought condition, and this has been extremely accurate at marking tops and bottoms. So over here, that was the top, daily oscillator marked it. That was the top, daily oscillator marked it. Here we had the bottom, another bottom. So clearly everything's lining up as far as the technicals for us to get a pivot soon. There's also this 50-day moving average up here. I doubt we go touch it, and also that would invalidate at least a shorter term wave count. But it's there. It's something to be aware of. Certainly don't have to touch it. And again, I'm not thinking we will. Now that's the daily chart. And I'll also mention, okay, so even if we were, super bullish, this is the end of the bear market, barely got started and now it's already finished. And now we're just going to zoom up to all-time highs. Even in that scenario, which to me is a ridiculous proposition at this point. But let's just pretend that's what's happening. By this point, we're well above the daily T-line. So the consolidation, at least back to touch that T-line, is coming. And right now the T-line is at 25.35 or so. So I mean, we're a good, I don't know, a good 50 points or so away from the T line. So even if you were, trying to be super bullish, this is no place to, be looking for an entry or anything. Just thought I'd throw that out there. But again, ridiculous to think that way at this point. This is a bear market until thoroughly proven otherwise. And we're nowhere near doing that. I mean, you'd have to get well above the 50 and the 200 and these resistance areas up here, that 2800 area. And you'd want to see the 50 cross back above the 200 and then a healthy pullback. And then only then you would kind of consider, okay, now we have a new uptrend, think about going long in a more significant way. But again, highly unlikely, definitely not what I'm anticipating here at all. Now, okay, daily chart, we're done with that on SPX. Let's go to the weekly chart. And on the weekly chart, we're just right up at that weekly T line, so that's a nice area to find resistance at as well. And you can see previously that weekly T line did a very good job containing any kind of upward moves that we've had. So that could, in fact, that's likely to once again serve as good resistance here on a weekly basis. So I thought I'd point that out. All right, so that's good for the daily. Before I proceed to the other charts, might as well throw out there what I got going on. So let me clear all this stuff out here. Okay, SPY. So I've added to my bearish position at this point. As of today, I added. I liked what I was seeing there. So I now have 30 SPY March 260 puts. So that's a pretty sizable position. Let's see, dollar-wise, that's $36,000 worth of puts. So that's certainly a good size position, looking to catch a big move down. And not only do I have those, I have VIX calls, and I have 20 of the February VIX calls, so 13th of February 2019, of the 16 strike VIX calls. So obviously I'm looking for, big move up in VIX, along with a big move down with the equities. And, okay, that's a little over $10,000 worth of VIX calls. So between that and the SPY puts, I'm definitely positioned for significant moves there. Okay, so just thought I'd share the positions that I currently have on, just to show the skin in the game. All right, so we're done with the SPX chart. Let's go to the Dow Jones Industrial Average. Now the Dow Jones Industrial Average, Industrial Average also had a doji day today. Very much the same message as SPX. We're in the overbought condition on the oscillator. The Dow, this would be the similar or the equivalent level for the Dow doing 4-1 overlap with the new revised wave count. And you can see we did not overlap that level on the Dow. So that's still valid there. Weekly on the Dow, let's see. I think it's basically the same message as SPX. We're basically just hitting resistance there on the weekly T line. So that's looking good there on the weekly. And that's probably adequate for the Dow. Let's go to the Nasdaq Composite. So on the Nasdaq Composite, also a doji-like day. We're in the overbought condition on the oscillator once again. And let's see here. Basically right there, let me see the Nasdaq's shorter term patterns here. Did we get overlap here? Let's see. So this level on the Nasdaq was 6,984.34. That would be the termination point of wave 1 with the new wave count that I'm working on SPX. Definitely could be used as an equivalent wave count on the Nasdaq. So 69.84.34, we went as high today as 69.85.22. So the slightest of overlap here on the Nasdaq Composite on an intraday basis. But I'm willing to forgive such a slight amount of overlap since it is only on one index out of the three. Also, I always like to look at that on a closing basis. So let's just look at our closing only chart. And you can see on a closing basis, there was no overlap. So I'll forgive it as long as everything else remains intact. I'm willing to overlook that as it is slight and not on a closing basis and only on just the one index. But certainly good to be aware of it. And we're pretty close to that 50-day moving average on the Nasdaq. So that previously acted as a nice resistance pivot as well in that last big pullback we had, or last big rally, counter trend rally we had. So Nasdaq message is still the same. 3-wave rally off the bottom. Looking for a resumption in a new impulse wave to the downside to complete the larger degree wave 3. Let's look at the weekly on the Nasdaq. Okay, weekly on the Nasdaq, we're actually slightly above the weekly T-line, although ideally we don't close above it, as that's the most important thing on a closing basis. So the Nasdaq showing the most relative strength on this counter trend move up, but that's just the nature of it. It's a higher beta index, so it'll likely also go down more once we start moving the other direction. That's just the way it is on the Nasdaq. It moves more, bottom line. Okay, so that's probably adequate now for the Nasdaq Composite. And we'll go to the VIX. So on the VIX, we did get a little bit below that minor support level we had, which was 2034 and 19.9, that kind of area. But really, we're just right there. The key support that I wouldn't want to see get taken on the VIX is around that 16 level. And we're certainly pretty far away from there still. So today's intraday low on VIX, 1948. We closed 1998, so right around 20. I expect VIX to start shooting up again fairly soon once we start rolling over on the indices. And look at VIX's daily oscillator in the oversold condition. And you can see that this has marked significant lows on VIX and significant highs as well. So the oscillator works on the VIX chart too. All right, so that's VIX. Now I want to go to the VIX VVIX tool, as it's actually showing a good message right now. And on the VIX VVIX tool, so we have a signal in progress, not confirmed yet. So I have drawn these trend lines to show the divergence. We now have a very clear divergence between VIX and VVIX. So VVIX is now making higher lows and higher highs, stair-stepping up, and that's while VIX was making lower lows and lower highs. So clear divergence between VIX and VVIX. So okay, that's step one of the signal. So check mark in that box, VVIX VIX divergence. Now we also got above the 55 period moving average on VVIX. So the red moving average here on VVIX, we've clearly gotten above it. We did a couple little nicks of it here, but now we have a true clear break above it. So divergence got above the VVIX average here. Now the next step for a confirmed signal is SPX to get below its blue moving average, the 65 period. Remember, this is all in the 30-minute charts. And right now that blue moving average is 25.38. Okay, so right around 25.40. And that's roughly 45 points away or so, which shouldn't take long if we can start trending down. So once we get below that average, this is a confirmed SPX sell signal, and the signals this system has given have been quite powerful, both to the upside and to the downside. They've led to some significant moves. So we already have the signal in the making. With all the other work I've shown today, there's some pretty compelling reasons here to be looking for significant downside action. But we need the confirmation. It has to actually start doing it. All the conditions are in place now for it to happen. Now it just actually has to happen. All right. So that's probably good for now. Check in at the end of the week, on the weekend sometime likely. And yeah, bottom line is upward move, looking mature, looking to roll over anytime now. All the technical conditions you'd be looking for are in place. Now it just has to actually do its thing. All right, that should be good for now. Serial Trader signing off.